Today's tip is to become a master property investor before you invest in property. You see, there's a massive difference between uh, being a master property investor and being an average property investor. The problem with average is that most people do not understand what it means to be average. So the last thing that you are is to become an average property investor or an average investor. And this is what today's lesson is going to be about. So if you're new to this channel, I'm Dreyer, founder of the Wealth Creators Method, where we help entrepreneurs and investors to create, to grow, and to protect their wealth by applying the Wealth Creator strategy. The Wealth Creator strategy is about the skills, and the moment that you've got the skills, then everything changes and you become a master, right? And this is what we're going to talk about today. Now, I've been investing in property for more than 40 years by applying the Wealth Creator strategy. So the reason why I've got this channel and specifically this playlist is to help you not to make the same mistakes that we've made when we started off. So what is the problem of being an average investor? Before we get there, I'd like to take you to an Excel spreadsheet quickly, just to show you how it really works and what it really means to be average. What I did was to go to the Property Pro Investment system. There I've helped some of my students, and also I've used that for when I did live presentations. And I would normally take someone out of the audience that thought that they had a great investment, property investment. And then literally within 5 minutes, we would do an analysis on that. In other words, I helped them to see if it was a good or a bad investment. And all I did was to I ignore all the infinite properties. In other words, the really good properties, simply because those are my top students. And then I looked at the rest. Now, where I could find a growth over a 5-year term. And then I did was took the first 20 properties and I sorted them from the best to the worst property for those 20 properties. Of course, we've evaluated thousands of properties. Now, when I look at this Excel spreadsheet, we're going to find that if you look at the average over those 20 properties, it's going to be 45.91%. But there's a principle called the Pareto principle. And the Pareto principle basically says that 80% of the effort that you put into something is only going to produce 20% result. So what we need to do is to look at the 20% and say, okay, this is where I want to put the effort in. Therefore, I'm going to get 80% of the result. Now, what they then did was to say, okay, but how does it work in finances or investments or with a business? And that principle works wherever you want to apply it. You're going to find the 80-20 principle. So 20% of the people are going to earn 80% of the total income in a specific industry, as an example. Exactly the same thing is true when it comes to property investment. The masters, the top 20%, is going to outperform the bottom 80%. And that is what I want to do. So we have to separate the masters from the average to see what the average really is. And the way that we do that is very simple. We take the top 20% out. We then get an average, and now we see the average of the average drops to 5.46%. And then when we take the masters, we're going to see that the average of the masters then becomes 207%. Now, what do you think is going to happen if we take this over a period of time and we say, okay, let's make it 5 years from now on? How much is it going to cost you if we invest 12,000 Rand per year? In other words, more or less 1,000 Rand per month. And we do that over 5 years. Then on 207%, you're going to get to 1.5 million. This is on condition that you can keep on and that you've got the skills to be able to continue with this process through the 5 years on 12,000 Rand. It has cost you 60,000 and you've got 1.5 million. Now, with 5.46%, it also cost you 60,000, but you've got only 66,000. Now, what do you think is going to happen if we change that to 7 years? In other words, now it cost you 84,000 Rand for both parties, but the one party is going to have 15 million and the average person is going to have 99,000. In other words, there's like, was it 15,000 Rand difference between what they've put in and what they've got. Now, in the master class, I've got a property master class, an online master class. There I'm going to dive into why the average person, in other words, the homeowners, will never be able to get out of this rat race. It is virtually impossible for them. And I've seen this time and time again. The moment that you start diving into this and showing people what the real outcome is, the light bulbs go on. And it's because we do not take the responsibility to learn how to become master investors before we actually invest in property. And with property, the trick is that you can become a master without risking a cent. Unlike any other investment that I know of, where you have to physically put in the money, unless, of course, you apply the wealth creator strategy. But most of the time, people put in a lot of money and then they start throwing money into the business or into property, hoping that it's going to help them. And that is not what I want for you, simply because there's a far, far better way of doing this. And this is where we identify the problems of being an average property investor, which we've already started doing. But now let's dive a little bit deeper into it. Okay, so what is the problems of being average? An average property investor, an average business owner, and what causes that problem? Because that problem is actually the risk. So the moment that we can identify the risk, then we can maybe do something about that risk. And as soon as we do something about that risk, we need to gain the skills to offset the risk. And the moment that we know how to offset the risk is not applicable anymore. And exactly the same thing happens with property. In other words, with property, we can do the risk assessment because there's 27 variables when it comes to property investment. And then we can gain the skills before we invest in our first property. And that makes the difference between being successful for the rest of your life or being able to suffer for 5 or 10 years and then give up and say, but property is not a great investment. So my moral obligation towards you is to make sure that you do not fall into this trap where you think that property is great because everyone tells you that it's great, but it's not great. Right. So it's far better to understand this process before you begin. Now, there's a little bit of good news if you've already fall into this trap. And again, in that masterclass, that online masterclass, I'm going to explain to you what you can do if you already in this trap. Now, you will not know if you're in this trap unless you do this analysis in order to see what's the real growth on your current property portfolio or your house or your property investments. Now, most people don't want to go there because they don't want to hear the truth. So what are these problems? I'm going to mention a couple of them, and hopefully that will be able to help you. So first of all, it's a lack of knowledge and understanding of the investment markets as well as the strategies. So if you follow the normal strategy that everyone else is trying to follow, and again in that masterclass I'm going to explain that, then you're going to get that average outcome. And if you compare that average to inflation, you're going to find that the majority of people, and I will prove that to you during that masterclass, that within 5 years, they are losing big time on their properties, thinking that they're doing not so bad, simply because they don't want to hear the truth, because the truth is that that's the reason why the majority of people will never become financially free and have a life of abundance. Right. But the opposite side is also true. If you follow the wealth creator strategy, then everything changes simply because now you're a master. And by following this process, you identify the risk, you learn the skills to offset the risk. And by learning how to offset the risk, you get a phenomenal growth. And this is where, in this case, that 200% versus that bad 5% comes into play. So it's a lack of knowledge. Now, in a business world, exactly the same principle applies. So there's a study done by Dun & Bradstreet over a 100-year period. It's a credit institution, and they followed registered companies that borrowed money, and what was the outcome over a 10-year period. Now, within the first 5 years, 80% of those companies fell, per the principle, right? And then of the remainder 20%, if you follow them for another 5 years, 20% of those businesses are going to fail. In other words, over a 10-year period, it's only 4% that succeed. Now, what causes that? That is a question that they wanted to know. And the outcome was it's a lack of skill and competency on behalf of the business owner. Now, exactly the same principle apply to property investors. Exactly. This is what I've, as a teacher now or a mentor for the last 20 years, I see that time and time again, it's a lack of knowledge and understanding. That is what causes a problem. All problems basically can be related back to that. Now, let's dive a little bit deeper into this. What is the outcome of not having that understanding and know what to do? Well, you're going to make emotional decisions and that result then in impulsive buying and selling. Sometimes you should never sell a property, but because we are conditioned for short-term gains, people let go of that property because they don't understand the process, which, by the way, I'm going to quickly touch on now, but in the webinar, the masterclass, we're going to go a lot deeper into it. Now, because they don't understand and they become emotionally, then the third problem shows itself. And the third problem is they become dependent on others like a broker or an advisor or financial fund manager or a bank or a financial institution. And they start believing these people, thinking that they are experts, while those people themselves have got no idea how to really invest in property and how to let their money work for them and how to run a business, right? Except by being a great salesman. Now, what is the result of that? Now we start looking at short term instead of long term. So we want to have the immediate gains, and when we're not getting it, we start hop, skip, and jump from one opportunity to a next. We try to diversify our portfolios and stuff like that. That does not work simply because we do not get the basics. Now, why is that? Simply because it's an inadequate understanding of investment risk. Now, with property, there are 27 risks. So if you can identify the risk, then there's no need to diversify your portfolio because you can handle the risk. So the trick about property or investments or even your business is there's only two components, always to any investment. The one is risk and the other one is growth. Now, what most people do, they take all the risk by giving their money to an incompetent person that is there in order to make commission or fees, right? And therefore, they've got all the risk and they've got no control over the risk. They can't manage it. They can't learn the skills to offset it. And they've got no control over the growth on that investment. So you can see what bad situation people start running into it. And when they think that they're going to invest directly in property, they do what other people tell them to do instead of investing in themselves, getting the skills, and then do the sums before they actually buy the property. Now, why is this a problem? Because the majority of people that I'm dealing with when we start the process hasn't got any long-term goals, or they are not clear about their long-term goals. And because they're not clear about their long-term goals, they are not committed. And because they're not committed, they don't focus. And if you do not focus, you're going to start with this hop, skip, and jump process, trying to diversify, put a little bit of money in a pension fund, a little bit of money in retirement annuity because other people tell you it's good. By the way, I haven't got any of those. Endowment policies and stuff like that. And that is why they will never get ahead, because in their property, as I've showed you, the average is not what you think the average is. The average is below, far below the average. And this is why the average person is suffering so much, because they don't understand the average is because it's higher because of the masters in this thing. And the reason for that is the inability and to effectively navigate the market by understanding the risk. And even if for example, in property, one of the things that is busy happening here in South Africa at the moment, in fact, around the world, is that the interest rate goes up. So if you buy a property and you don't understand what interest is, and that the interest in South Africa can go up to 24% plus, then you're sitting with a massive risk. Now, the moment that you understand that risk and you've got the skills to mitigate that risk and to offset those risks, then it's not a risk anymore. In other words, in my portfolio, in my students' portfolio, that interest rate goes to 25, 30%. We're not worried because we are going to get this same outcome that we've set ourselves when we set that goal. And very few people know how to do this simply because they haven't got the skills. So what is the solution to all of this? The solution is so straightforward, yet 95% of the population is not going to do it. And the solution is invest in yourself before you invest a cent in anything. So before you invest in property and buy the property, invest in yourself to understand the risk attached, to identify the risk, gain the skills to offset it, do what we call mock charges. In other words, in my case, I've actually investigated 133 properties with thousands of permutations before I bought my first free property. But nowadays, it's so simple that you don't have to go through that process. And I can literally evaluate the 50 top properties that I've looked at or that's on the book of a estate agent, and I can evaluate those properties in less than 10 to 20 minutes, run through the 50 because I've got the system and because I've got the skills to be able to. Now, what is it that I'm looking at? Right, very straightforward. I'm looking at what growth must I get on my investment, the amount of money that I want to invest as a lump sum or in terms of monthly. We call that your financial freedom growth rate. Now, again, if you're not one of my students, the chances are 99.999% that you've got no idea what your FFGR is, your financial freedom growth rate. Luckily for you, if you attend that masterclass, that online masterclass, then I'm going to give you access to a very powerful course with the Excel spreadsheets to show you how to calculate this yourself, because your FFGR, my FFGR, and the rest of the world has got nothing to do with each other, and it's individually that is important. In other words, what is your FFGR? Once you've got that, now it becomes very simple. When I do the analysis on a property, I make sure that my IGR is bigger than my FFGR, because then I know that I'm going to get to my goal. And all of this is in that course on condition that you rock up, that you stay there to the end, and then we're going to give you the link so that you'll be able to do it. But this is powerful stuff, and this is the only solution. So the question then is, but how do I know if property is a great investment or not? It's only a great investment if my IGR, my investment growth rate, is higher than my FFGR, my financial freedom growth rate. Yet people do not know this. Now, how can you make sure that your IGR is bigger than your FFGR? Very simple. We need to identify the risks attached to property investments or in your business. Once you know that, then we start with the skills to offset that risk. And I can guarantee you that there are numerous ways to offset the same risk, because we are individuals, because we think differently, we react differently, and therefore what suits me and what will be great for me does not mean that it's going to be great or suit you. And for that reason, you have to become aware to see, but how can you apply and how can you offset risk in a specific situation? So what is risk? Risk is simply, Warren Buffett says, risk is when you do not know what you're doing. In other words, the way to offset risk is to gain the skills. This is what we do at the Wealth Creators Method. In other words, there are 4 high-value skills, and if you take these skills in the right order for the level of the game that you're at, and you start to apply it, miracles starts to happen. And my students are not getting 200%. They're getting far better than that in either their business or in their property investments, simply because they are prepared to understand how it works and mentally invest in themselves before they start. Because the first investment skill is the mental high-value skill. And people don't pay attention to that. They don't know how to set a goal. They don't know how to commit to that goal, because they are not committed. They don't focus. And because they don't focus, they're not going to see this through. So the more skills that you've got, my friend, the better you can start stacking these skills. And by doing that and by knowing the process to do it in the right order for the level of the game that you're at, miracles starts to happen. And that means that you're going to need less and less money. But at the same time, your growth is going to become phenomenal. And it's the growth on your investment, taking risk into consideration. That is what's going to make you rich. Right. So this is the reason why I've taken on a challenge about a little bit more than a year ago. And I said that I'm going to turn 100 Rand in total if you've got 100 Rand as your total security, then I think that you'll agree with me that there's no ways that you can go to the bank and say, I want a bond. In other words, I'm not going to stand any security for that. I'm not going to go to the bank initially and say, listen, buddies, I need the money, because I know they're not going to give it to me. But eventually, by applying these skills and stacking these skills on top of one another, I want to turn the 100 Rand into a 10 million Rand property portfolio. So that portfolio, after all costs and bonds paid in full, is going to be a simple 10 million net profit from 100 Rand. Now, I want to invite you, if that is something that you would be interested in, to see what are the blueprints, what's the wealth creator strategy, what is the method that I'm going to follow, and I'm going to play 100% open cards with you, show you exactly when I started and I made that video to tell people that this is what I'm going to do, what are the steps that I started taking into action when I had only 100 Rand. Of course, today, a little bit a year later, things are looking completely different, and we're basically halfway there already. So this is really powerful, but it's only for people that are willing to put in the time and the effort to invest in themselves, to understand the risk, and then to start building on that in order, how do we offset this risk? So I can, if you're serious about property investments or investments in general, the one thing that I can tell you is, whatever you do, don't miss out on this opportunity. In other words, you're going to find a link somewhere on this page. If it's on YouTube, in the description area, otherwise somewhere on this page. Click on that, book your spot, and whatever you do is make sure that you pitch up, because this is going to be 2 hours of content, and then we're going to get into a question and answer session. I'm not going to sign off until each and every question has been answered. And on top of that, I normally get a question at the end. But honest, isn't there a way that you can mentor us? And once they see the power of this, and then, of course, I'm going to explain that, but that will be after everything that I've promised, I've delivered on that. And that is for a small group of people that may be interested in the mentoring. So there is a sale at the end, I'll tell you, but I'll tell you now we're done, and you can sign off if you just want to get the information. So I'd like to play open cards with you so that you know exactly where you stand, because you'll see why that mentoring can speed up the process and really help you to excel to become a master property investor. Now, also, please don't forget to like, to subscribe, and to hit that bell icon if you want more tips in this series that we've got, the Unlocking the Secrets of Property Investment series. And also, go back to the first one and the second one and the third one, because we do this on a weekly basis. There's going to be a ton of information that I'm sure that if you go out and you apply it, you're going to see the difference in terms of mentally your mindset, as well as what happens in real life the moment that you start applying that. So in this series, I'm going to apply and sharing even more valuable insights and strategies on how to make the most of your property investments. Now, also, if you've got a question on this topic, feel free in the comment section to ask me that question, or even to make a comment, because I'm looking at these comments, and maybe, just maybe, I can use this as a topic for our next video, because 90% of the time, the question, if you change that, there's a tip that I can give you to overcome that problem. And that's the reason why I'd like to offer this to you if you want to make use of this. So we're basically at the end, and all I can say is thank you so much for watching, and I'm going to see you in the next one.